Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Mako Mining. Mako Mining is traded on the TSXV under the ticker MKO and on the OTCQX under the ticker MAKOF. I'm joined today with the president and CEO of Mako Mining, Akiba Leesman. And Akiba, it's great to have you on the show as always. Now, you put out some interesting news to the marketplace today on September the 30th. And this is about a proposed acquisition of the Mount Hamilton gold-silver project in Nevada, something that could be a heap leach mine for gold and silver, open pit, but also a interesting tungsten, copper, and moly target down at depth as another kicker on this project. Deal's a little complicated in the sense that initially, Sailfish Royalty Corp is going to acquire the Mount Hamilton gold-silver project with the help of the common stakeholder you both have in Wexford Capital. And then the idea is for Sailfish to turn that over to Mako Mining in exchange for a gold stream that is then backed by an eventual 2% net smelter royalty. So it's a little bit of a complicated deal here, but it's basically a chance for you to get into another development stage asset and a near-term production asset by way of your partner company, Sailfish Royalty. Walk us through the details of this transaction that looks like an accretive deal for all parties involved.
All right. Thanks, Shad, and thanks for having me on. I'm getting a lot of like Avril Lavigne quotes. It's like, why do you have to make everything so complicated here? But the reality of the situation is actually a fairly simple acquisition. So we'll start at the end and then kind of like work our way back to the beginning on how and why we structured the transaction that we did. So at the end, assuming everything is moves forward and we get all regulatory approvals associated with this, Mako will wind up owning a fully permitted gold and silver oxide, heap leachable, effectively shovel ready for construction project in Nevada. And then from a geological perspective, what we're requiring right now in the Mount Hamilton project is an interesting one, right? So there is this epithermal overprint, the deposit that we're acquiring, that's currently about 600,000 ounces, all categories associated with it. And this is an epithermal overprint of a skarn mineralization on the upper part of the deposit. Now, spatially disconnected from this, so beneath this gold and silver deposit, there happens to be a relatively high-grade tungsten target, we're calling it, that was extensively drilled out by a previous owner in the late 1960s through the early 1980s, Phillips Petroleum, who put in excess of 30,000 meters of drilling. And at one point, there was a historical reserve that was put on this. That tungsten, I'm using the term a little bit loosely right now, deposit is completely different than the gold, but it is part of the acquisition that we're taking on. The gold being permitted and the tungsten needs more work in order to get to that point where it can actually be useful to help fix some of the U.S.-based supply concerns amongst this highly strategic metal. Now, how we're buying it is that Sailfish effectively is going to be the intermediary, if you will. And the reason why we're using Sailfish as an intermediary is twofold. The first is that Sailfish currently owns an asset that is leverageable, right? So Wexford, the controlling shareholder of both Sailfish and Mako, will be providing a US $40 million bridge loan to Sailfish. They'll be backed by the Spring Valley royalty, amongst other assets that Sailfish currently owns. And then that cash is going to be used to acquire this asset from this arm's length third party. And then immediately thereafter, Sailfish is going to enter into a transaction to vend this to Mako in return for this 5-year gold stream. And the terms of that 5-year gold stream is that there will be 4,100 ounces of gold per annum across those 5 years, where Sailfish will pay Mako 20% of the spot price of gold for each one of those ounces. And then there is an effective cap on that of $3,700 an ounce. And the fact that gold is trading higher than 3,700 means that if spot prices maintain where it is right now, it will be less than 4,100 ounces per year for 5 years. Now, on top of that, once that gold stream is complete, 5 years hence, there'll be an additional 2% net smelter return on Mount Hamilton. So if you think about what actually happened through all these transactions, is that Mako has acquired this fully permitted 600,000 ounce deposit ready for construction, oxide heap leachable gold deposit in the best jurisdiction on the planet in Nevada. And on top of that, announced its initial foray into US domiciled critical metals without issuing a share and without issuing any debt other than this 5-year gold stream and subsequent 2% net smelter return royalty. Now, Sailfish, in order to repay that bridge loan, has engaged a bank, a national bank, a very well-suited bank to run a sales process for Spring Valley. And we intend to monetize a portion or all of Spring Valley to repay that $40 million. So at the end of the day, we basically took a loan, bought the asset, vended it to Mako. Mako has this gold deposit with a critical metals, specifically tungsten, underneath it, and Sailfish has a kick-ass stream to boot. So both sides are very, very benefited for this transaction, and neither side had to issue a share of equity to complete it.
Yeah, Kiba, it's a little complicated, but it's a total win-win for both companies, and I would say probably a win for Wexford too, and probably a win for the asset getting some work done on it. So there's a couple rapid fire questions I just want to fire off to you real quick here. As far as the gold stream that you would be paying to Sailfish, can that gold come from San Albino or Moss, or does it have to come from this project?
So the expectations is that the majority of those 5 years, it will come from Mount Hamilton, right? So our expectation is that we're going to be making a construction decision very early next year. So while this is a fully permitted project, it is a project, not a mine, so it still needs to be built. But in the interim, when this deal closes, and we expect that on all aspects of the deals over the course of the next couple months, it will immediately become payable, that stream. So almost by definition, the first year or so of repayment of that 5-year gold stream will need to come from other assets besides Mount Hamilton, whether it be the Moss Mine in Arizona or through San Albino in Nicaragua.
Okay, just wanted to clarify that. So you got some optionality there, but eventually the plan is to fast track this into production. Let's talk about this as two different steps then. The first step is the gold and silver at surface and the ability to build the mine, get it into production, and then we'll back into the second part of this project, the base metals at depth and the critical minerals. For the top part of this, it's pretty straightforward as far as an open pit in Nevada. Just walk us through that part of the project.
Sure. I mean, this is a run-of-the-mill heap leach project. It will require relatively simple crushing to get started. The land that encompasses the entirety of the resource is U.S. Forest Service. There's a little bit of BLM and patented ground elsewhere on the land package as well. But the permits for the project itself have been granted at the federal level from the U.S. Forest Service, and then for local permits from the state of Nevada as well as others. So to get the project up and running, we'll probably have to do some additional technical work from an internal perspective. We're pretty confident that we'll be able to make a construction decision once we have all the technical information in place by the end of Q1 of 2026. So effectively imminently within the next 5 or 6 months from now. And then the construction schedule will have a better disclosure around what the overall CapEx of a project like this would look like, but it's not going to be a large capital intensity project. We think projects like this, and there'll probably be some movements specific to Mount Hamilton, projects like this should take less than US $70 million to get off the ground. And then the pit constrained resource that we just put out this morning shows a relatively high grade for an open pit heap leach asset. This is the United States, so our resource providers liked using imperial units over here. So apologizes to all your metric fans out there. But if you take our grade for the measured and indicated resource of roughly 0.02, maybe even a little bit more than that, ounce per short ton of mineralization, that equates to right around 0.7 grams a ton. And for a relatively low strip, heap leach oxide deposit, that is a potentially highly economic open pit heap leach grade profile that we have for the initial project of this roughly 600,000 ounce fully permitted Mount Hamilton gold silver epithermal overprint of one of the two skarn based mineralizations that we have in terms of what we acquired.
Yeah, so just wrapping up the first part of this, that the first overprint here of the gold and the silver, it sounds like from a development standpoint, if you're going to be ready to make a development decision on it in the first quarter of next year, in the next 5 or 6 months, not to make a bad Mako pun here, Akiba, but it sounds like this project has jumped the shark as far as the batting order, and it's moved ahead of the development of where the Eagle Mountain Gold project in Guyana is set to develop. So maybe just speak to the quick batting order for people following along here. You've got Moss ramping up, and then you've got this project that'll be in development next. Is that correct?
Well, that's right. I noticed last week that Arthur Fonzarelli actually celebrated the anniversary of jumping the shark last week. So I retweeted that on Twitter, that the Fonz, if you will. I wouldn't exactly call this jumping the shark, but definitely from a jumping the queue perspective, this makes a lot of sense in terms of our project construction schedule to go ahead first. And there's a few reasons for that. Like obviously the fact that we actually have US based operations and our technical headquarters are in Arizona, as well as our current only operating US mine at this point that's still in ramp up mode over at Moss in Northwest Arizona. So there's a lot of synergies that can happen by having a second US based asset over here. And then likewise, Guyana has a few reasons why it would probably be later in the queue of development. The first is when we expect to get the full EIA approved over in Guyana. We're going to be getting our public consultations in October in Guyana, which is probably about 2 months behind our original schedule after we acquired Gold Source. That was mostly delayed because of the elections that happened earlier this month. That being said, it pushed back our expectations for getting a full EIA approved in Guyana to likely in the early part of Q4 of next year. So contrast that with a fully permitted project right now. And then there was always kind of this scheme within Guyana to go and get an early works permit. So I do think we would have the ability to begin construction prior to getting that EIA. But there's always good reasons why you want to have everything permitted first. And then secondly, and quite obviously, is that Guyana right now is going through a boom, and there are definitely labor shortages over in the country. So our biggest competitor within the region is G Mining with their Oko deposit that their project that they're rapidly advancing right now. Now that they're fully permitted to get that done. That being said, they're going to hire in excess of 2,000 people to go in construction phase, even though probably just a little over half of that will be used for the full operations. So building a project in Guyana at the same time as G Mining is not impossible, but there's definitely some labor competition that you might not want to be fully involved with. That being said, we'll always do what's best to see what the best schedule is for our development. We'll never take on more than what we can chew, but I do think everything is leaning up to having this be the next project that gets built. And from a timing perspective, you couldn't ask for better timing, right? With Moss ramping up in the United States, with San Albino gushing out the cash that it's expected to do in Q4 when we're back in the high grade part of the ore body. So you'll really have the ability to go and build this project without the needs for that much more capital, right? Because we'll have quite a bit of cash on the balance sheet. We'll generate quite a bit of cash from those two assets. So whatever capital needs we need to get Mount Hamilton into production are not going to be all that big at all. And then when all three assets are up and running, then it makes the Eagle Mountain construction fully financeable with the cash flows coming from those three assets going forward.
Well, yeah, it's nice to see the pipeline of producing and developing assets getting further down the lane here, and then you'll go from one to then two, which you just have with Moss, to now three with this Mount Hamilton, to then four with the Eagle Mountain project. But let's get into the second layer of mineralization here at Mount Hamilton, and that's this Mount Hamilton tungsten opportunity. Again, along with the tungsten, there's also some copper and some moly. So really, three different metals, a suite of critical minerals. And for those that are not familiar with the tungsten market, we've had a couple of companies on the show discussing this, but there is a huge value in the tungsten now that maybe there wasn't even a year or two ago due to Chinese export bans and the importance, the strategic importance for military use. So walk us through this added layer of value sitting at depth.
Yeah, I always viewed tungsten as a fascinating metal in that here you have a metal that's used for direct kinetic military needs, i.e., tank shells, so penetrator shells and things of the sort, that require a metal where effectively 90% of it comes from a strategic competitor in China. It's always been insane to me that the United States has put themselves in a situation where very, very key industries are dependent on metals coming from jurisdictions that may not be our friends over the long run. And I do think this administration, more than previous administrations in the past, have recognized that's not a great place to be. So we've never really seen an industrial policy in the United States like this, probably for a couple of generations now. And in doing that, it opens up the door for strategic investments to come in. And then certainly we're in a position right now where when we were first looking at Mount Hamilton, I wouldn't exactly call tungsten as the primary reason why we were looking at it. This is a straight down the fairway type asset for Mako. The primary reason why we're acquiring it is because it's a pretty simple, straightforward gold project that we can build in pretty short order. But it was always known that there was this second skarn immediately underneath and spatially distinct from the gold asset that contained tungsten, and in our views, a highly prospective target within the United States. So if we're going to be in a situation where we're going to be starting construction on this, invariably, and I've made this comment known directly to the administration, is that invariably, if you have a project that's in construction or a mine, it makes everything associated with that project or mine, inclusive of exploration assets underneath it, that much more advanceable from an accelerated perspective. If you are breaking ground and you are moving dirt on the gold asset, it invariably means that the tungsten asset will become more advanced. So it puts us into a very enviable position in order to advance this critical metal. And I do expect to have ongoing conversations with the current administration to see if there's ways for us to help alleviate some of the supply issues for this very critical metal for the United States.
Yeah, it really is an interesting value driver here at depth on the deposit. And I wouldn't say that copper or molybdenum are throwaway assets either. I mean, we need all of it, but the tungsten in particular carrying probably the lion's share of the value. Just from an exploration standpoint, it just makes me wonder if it's different layers, can you just pierce both layers with the same drill hole? Could there be some efficiencies as far as exploration?
Yeah, I mean, there's layers of different levels of support that we can have. Obviously, there's some pretty low-hanging fruit targets on the gold side of the equation, right? So that's going to require drilling to get done, mostly to expand the current footprint of the roughly 600,000 ounce resource that we have. That being said, if you strategically place some of those drill holes, certainly you go down an extra couple hundred meters, lo and behold, that's going to accelerate your ability to go explore for the tungsten copper molybdenum target as well. So no question that's like the first layer. Then there's another layer is that the first time that we actually took a look at Mount Hamilton was in 2011, back when this was owned by Augusta Resources. And then subsequently, it was owned by a company that had sort of had, which I won't get into all the details, but it sort of had an affiliation with the predecessor of Mako as well, back between 2012 to 2015. So one of the key issues with Mount Hamilton is that the resource is at the top of the mountain, and then there's just not enough space at the top of the mountain to put your processing infrastructure. So that has to be put at the bottom of the mountain. So there's always like this question mark, how do you get the specifically the waste material and ore for that matter from the top down to the bottom. So there's always been like these back and forth ways of designing how that would get done. There was potentially an ore chute that could be developed to basically use gravity to take down the waste and the ore material basically through the mountain. In fact, what we're now treating as a historical feasibility study that was put out by SRK in 2014, it's been superseded by the resource that we put out this morning. That was actually one of the ways for you to move the material. Now, in doing it that way, you can envision a situation where you can have an exploration decline that gets put in and functions basically the same way as an ore chute. So there are ways of actually having capital offsets for some of the actual construction for the gold asset in terms of how the project would get developed. So that's kind of like what I would call the secondary or intermediate layer of potential government support, where if there's a way to allocate capital to CapEx decisions that will be beneficial to both the gold and the tungsten asset, great. We're all ears on how best to engineer it. And then the third, which we're not ready for right now, but hopefully over the course of the next year and a half or 2 years, we'll start putting the framework of the economics around the tungsten deposit, which will be a different level of capital intensity that will come from it. Something that probably a company like Mako could not develop on its own from that type size, but actually having the ability to have government support to accelerate that. And again, that's a decision that will be at least a couple of years in the future. Yeah, no, we're all ears on how best to advance this so we can actually be helpful to helping the United States secure some of these critical supply needs for their metals.
Well, it's a pretty interesting situation that's developing here because you have multiple value levers to pull. You have the value lever of the gold and silver at surface that is the near-term bread and butter for Mako mining. You have the ability to do this in a non-dilutive way and the partnership with Sailfish and Wexford, but you also have the ability here to possibly get some of that government funding to apply towards strategic and critical minerals to help with the development and exploration of the tungsten moly copper asset. And maybe that helps with some of the development as far as the gold and silver asset at the same time. So I guess just from a final wrap-up perspective here, Akiba, what are the next steps on this as far as how do you envision the roadmap looking, just to recap what we've talked about here over the next 6 months, but then maybe over the next year and a half, as you just laid out?
Well, the first priority is getting each part of this transaction closed, right? So we still do need to have feedback from the exchange on what to do on that. I actually think the first part of this transaction is relatively straightforward, is that Sailfish is taking a bridge loan backed by Spring Valley and using the cash to give to a third party who own Mount Hamilton, so that Sailfish, for a period of time, will be owning Mount Hamilton. The second part of this transaction will probably be a little bit more involved with from a regulatory framework perspective. We're still waiting to hear exactly what we need to do, but invariably we're going to have to jump through quite a few hoops just because of all the related parties involved in this transaction. That's okay. I mean, just like the situation with Moss of last year, where Wexford stepped in for a period of about 3 months in between to simplify the regulatory transfer of the asset, it will be treated in a very similar way now. So I don't anticipate all components of this deal closing for quite some time, but the first part of the deal should close hopefully pretty seamlessly. And then after that, we got to do the work to make sure that we take this updated resource that we put together in fairly short order to announce this deal this morning, and then start putting like real engineered economics around it so we can be in a position to have the technical information to make a construction decision in Q1 of next year.
Okay. And then in tandem with all of this, you still have everything else you had before today, Akiba. So just give us a quick recap of some of the key catalysts for the end of the year, maybe the first quarter of next year with San Albino or Moss.
Yeah, so San Albino specifically, so I sort of, not really guidance, but I sort of guided the market that H2 from a production standpoint would be almost equivalent to H1, but it would be back end loaded because we needed to go through some lower grade material in Q3, and then we'll be in some higher grade material, which actually just got word that we're as of last night, we're in. So it really was a Q4 event for all intents and purposes. So Q4 is going to be a record production for San Albino. That's especially at these gold prices where we are. That will mean a lot of cash coming to the balance sheet right now. And then likewise with Moss, since we acquired it officially in March, end of March of this year, and then subsequently hired a mining contractor to get their fleet up to site. From the original schedule, I think we're probably about 2 months behind where we wanted to be. And then half of our fleet is at site. We expect the other half of the fleet to arrive over the course of the next 8 or 9 days, thereabouts. So in my last guidance to the market that I gave in Beaver Creek, we expected to be at full scale mining in November, which we still do, and then that would imply a more or less steady state level of production starting in and around the middle of Q1 of next year. So when you actually think about from a timing perspective, not everything is completely in our control when deals come, but Moss was acquired in a perfect timing situation for us. And then likewise, it looks like Mount Hamilton was timed perfectly. And again, not intentional. This is just luck. It was timed perfectly in terms of when that is going to be ready for construction happens to coincide when we're going to be in the highest level of cash flow that the company has ever seen from the two operating assets. And then with respect to Eagle Mountain, nothing's really changing from a permitting perspective on that. We're going full force. The only potential change to this is that if we do decide that Mount Hamilton is going to jump the queue, it makes our need for that early works permit less, right? Because we can just then wait to get this thing fully permitted in early Q4 of next year. But beyond that, there's really no difference in what we're doing on the ground at Eagle Mountain now versus before, irrespective of the trajectory of Mount Hamilton, just because permitting requires a process, and the process takes as long as it takes, even in a jurisdiction as mining friendly as Guyana.
Well, there's a lot going on with Mako mining in four different jurisdictions, four different projects, a lot of growth on tap from a production standpoint, from a revenue standpoint, and these higher metals prices, and also a lot of development work going on at all of the projects, really. So, definitely a lot of news on tap from Mako Mining. And for those of you listening in, definitely click on the link below in the show notes. It takes you right over to the Mako Mining website, straight to their news section where you can sign up for updates that hit your email inbox or just follow along with the news as it hits the wires. Akiba, I'm sure we'll be talking again soon just because of all the different developments. And as always, looking forward to our next conversation.
Okay, perfect.